29, it cannot be allowed by the Deputy Commissioner of Taxes because this is not actually legal expenditure. So this is not related to the business because nothing is incurred by the diagnostic center, but it is just given to the doctors as bribe. So that's why this is not actually legal. That's why the city cannot allow it under section 29. So you can also refer it to a High Court case, CAPSCAN and Diagnostic Center P Limited. CAPSCAN and Diagnostic Center P Limited. The decision actually said commission paid to doctors for referring patients for diagnosis is not allowable as business expenditure. So this is not a business expenditure. It could be something different. Number 16, here another question. Can the expenditure incurred on heart surgery of an SSC being a lawyer by profession be allowed as business expenditure under section 29 by treating it as current repairs considering heart as plant and machinery, or under any other section by treating it as expenditure incurred wholly and exclusively for the purpose of business or profession. That means the person concerned, he is a lawyer, meaning that he is a practicing lawyer, and he underwent a surgery, that is heart surgery was done. And the expenditure he incurred for the heart surgery, he claimed it as current repairs to machinery. Machinery means his heart. He thinks that his heart is a machinery, and the surgery, cost of surgery, is to be treated as repairs to that machinery, because he thinks that he applies his brain for consultancy purposes or professional purposes, and his heart is the main machinery of his body. So that's why that heart was not healthy, and that's why he had to undergo a surgery, and that's why he has now been recovered. So this expenditure which he incurred is treated as repairs to the machinery, whether it would be allowed by the Deputy Commissioner of Taxes while assessing his income to tax. So this is also a High Court case, Delhi High Court case. And the name of the case is Shanti Bhushan. So the High Court held that no direct nexus between the expenses incurred by the SSC on the heart surgery and his efficiency in the professional field. Therefore, the claim for allowing the said expenditure under section 29 is also not tenable, as the heart surgery expenses shall not be allowed as business expenditure of the SSC under the Income Tax Ordinance 1984. So it has been said by the High Court that there is no direct nexus between the cost incurred on the heart surgery and the efficiency in the professional field. So that's why it cannot be treated as an expenditure under Section 29 of the IT Ordinance 1984. Then come to another question. Can payment to police personnel and hooligans to keep away from the cinema theaters run by the SSC be allowed as a deduction? So here the owner of the cinema hall is paying some money to the police personnel and the hooligans in order to keep them away from the cinema hall. So the payment that has been made by the SSC to the police personnel and the hooligans, would that expenditure be treated as business expenditure? That means whether it will be allowable under Section 29 of the IT Ordinance 1984. So this is not directly related to the business, because if the SSC employed answers or police or other security forces to protect the cinema hall from hooligans or from other unscrupulous people, in that case it would have been a business expenditure. But here in this case, they have not been engaged for that purpose. So they have been given some money to keep them away from the cinema hall. So which is not actually related to the business. So that's why it would not be treated as an allowable expenditure under Section 29 of the IT Ordinance 1984. So this can also be referred to a High Court case, which is, the name of the case is Nilavati and others. Nilavati and others. This is Karnataka High Court. And if the SSC had incurred expenditure for the purpose of security, the same would have been allowed as a deduction. However, in the instant case, since the payment has been made to the police and the gundas to keep them away from the business premises, such payment is illegal and hence not allowable as deduction. So that's the decision of the High Court. Number 18 question. Is the amount paid by a construction company as regularization fee for violating building bylaws allowable as deduction? So the construction company which actually violated the code, building code, and they now want to regularize the fee for violating the building bylaws. And if they pay some fee as fine or penalty, in that case, whether it would be treated as an allowable expenditure or not. So we can also refer it to a High Court case, Karnataka High Court. And the name of the case is Millennia Developers Private Limited. The amount paid to compound an offense is obviously a penalty and hence does not qualify for deduction under Section 29. Merely describing the payment as a compounding fee would not alter the character of the payment. So the company has paid actually fee with fine because it violated the building code earlier. So that's why whatever has been paid by the company is not an allowable expenditure under Section 29. Then come to the point, is the requirement to one moment, please. So what you are trying to discuss is that the requirement to grant a reasonable opportunity of being heard, mandatory in nature. Yes, it is mandatory in nature because the DCT has to give an opportunity to the SSC for being heard. And if he does not hear the SSC, he would not be not be able to do justice to the SSC, because the SSC has to be given an opportunity to explain how he actually got the money from different sources and what were the sources of income, whether that was his own source or whether something was from other sources, something was from gift, something was from uh, spouses as a receipt or as a loan, etc., etc. So he should be given opportunity to submit his books of accounts, vouchers, receipts, etc., so that he can defend his income. So this kind of opportunity has to be given to the SSC. If not, in that case, it will be violation of natural justice. So this is mandatory in nature. And the next question, can unabsorbed depreciation be allowed to be carried forward in case the return of income is not filed within the due date? So unabsorbed depreciation, that could be carried forward in case of a return is submitted, but still, if the return is not submitted in due date, it could also be carried forward because this is accounting treatment. So since it is an accounting treatment, it could be carried forward whenever the return is submitted by the SSC. So that is the answer, because unabsorbed depreciation is not that it has to be absorbed within a specific time. Rather, it should be absorbed even after the return is submitted anytime. And when the assessment is made, the provision could be allowed to the SSC. And then another question, can an SSC revise the particulars filed in the original return of income by filing a revised statement of income? Yes, the SSC can file a revised return after submission of the original return, because he could have made some mistakes in the return. Then he can submit a revised return under section 78. Or if a notice under section 93 has been issued to an SSC, he can also submit a return showing his income from different sources, which he did not show all sources of income earlier. So that's why a revised return could be submitted by the SSC, and if the income is changed or sources of income are changed, that could be done. But here one question arises. Whenever you submit a return and afterwards you change it, showing some income which are exempted from tax or which are taxed at a reduced rate, in that case, whatever additional income you have shown in the revised return, that income would be treated as normal income of the SSC, and it would be taxed at the normal rate. So that is the only problem with the SSC if he does not submit all the incomes in his original return. So that problem he could face if he submits additional income in the revised return. So this is the provision of submission of revised return, and I believe if the return does not contain any income exempted from tax or any income which is to be assessed at a reduced rate, then it is fine. But if it includes some income or incorporates some income like that, in that case, it will be assessed to normal tax by the Deputy Commissioner of Taxes, whatever additional income has been shown by the SSC in the revised return. So that's the solution to this problem. I believe that you have gone through this handout. and you can note down the points, whatever we have discussed, especially the points relating to the case studies. And case studies are, of course, very important because you can refer the case studies to the Deputy Commissioner of Texas whenever you face problems with similar nature. As we have said here, allowable expenditure, disallowable expenditure, whether something is related to the business or not, and whether the machinery has got some spare parts which are not part of the machinery or which is not included in the machinery for depreciation purposes, then the spare part would be of revenue nature, not of capital nature. So something like that, you can refer all these cases to your problems whenever you are facing such problems while consulting the assessees, because if you are a practicing chartered accountant, you will see so many new problems will be cropping up, and you have to find solutions to those problems. And if you know that you are working with an organization, not you are practicing as a chartered accountant, in that case also, you have to advise the company wherever you are working properly, because you will be working as a financial analyst or chief accountant or chief financial officer, and you have to save the company in many ways. I am not saying that you have to evade taxes, rather you have to avoid taxes through legal means. If you can avoid taxes through legal means, that is legal. It is acceptable to all. And the company, wherever you are working, they will also expect something like that of you. So you will advise them accordingly, which the company should follow. And there should be a tax planning. And in the tax plan, you will have to advise the various departments of the company, including the marketing department, sales department, purchase department, etc., to make some expenditures for promotional purposes or for other purposes which will not go beyond the limits of the allowable expenditures under section 29. And definitely you will have some other expenditures which will be disallowed, although the expenditure has been incurred by the company, but still it is not acceptable or allowable under section 29 of the IT ordinance. So many expenditures are there, of course. And you can see the entertainment expenditure. The expenditure that you will be incurring for the whole year may not be allowed by the Deputy Commissioner of Taxes, because there is a rule which is called Rule 65, and he has to follow the Rule 65 in order to allow that expenditure. But a question can come whether entertainment expenditure would be allowed in case the company makes a loss or incurs a loss, because entertainment expenditure is allowed on the profit made by the company. So if the company does not make any profit, would it not be allowed entertainment expenditure? So you can give a decision, and you can fight the decision of the Deputy Commissioner of Taxes if he does not allow it. So the decision is that the definition of income or definition of profit. Definition of income is that income includes profit, gain, or any other receipt. And it also includes loss of profit. That means whenever you are incurring losses, it will also be treated as a profit. So it is a negative profit, but it is a profit. So if it is a profit, in that case, entertainment expenditure would be allowed on the profit. It doesn't matter whether the company makes a profit or incurs a loss, but entertainment expenditure would be allowed to the company on that point. So you have to mention the point before the Deputy Commissioner of Taxes whenever he tries to reject an amount like that. And as we have said that the commission paid to the doctors for referring patients to the diagnostic centers. It's a very common practice nowadays, and you will see so many diagnostic centers are there in the country, and every diagnostic center is just charging fees to the patients, and they are just sending a very good amount, at least 30 to 35% of the fees realized by them to the doctors who have referred the patients to the diagnostic centers. This is in no way related to the business. You cannot say that this is a promotional expenditure, because you are not actually advertising for the modern examination of various diseases. Or rather, you can say that we have actually installed the up-to-date machinery or equipments for examining the patients here. So if you just promote your service in that way, or if you say that yes, so we have engaged the technicians from a specific field for specific purposes, or we have engaged some technicians from other countries in our diagnostic center. In that case, you can spend a lot of money for those promotional purposes. People will be attracted to go to your diagnostic center for better examination. So these expenditures are related to promotion, but other expenditures of general nature, just for giving the doctors incentives or giving the doctors a bribe, those are not actually related to business expenditure. So that's why they will not be treated as expenditures related to business. Also important because these are very common nowadays in the country. And the spare part we have referred to. Spare part, of course, generally we know the spare part expenditure is revenue expenditure, and whenever part of the machinery is installed and which generates the profit, and the capacity of the machine is retained with the introduction of the part of the machinery, that becomes a part of it, and this is to be treated as capital expenditure for the SSC or for the business. This is also important. You can find it out in many cases, and you will face problems with regard to that. So we have said about the raising of capital in foreign countries. That is also very important. Whatever way you are raising the capital in other countries, but you cannot consider the purpose of raising the capital, but you have to see the source of the fund. If you see that the source of the fund is raising capital, then it's of capital nature. It's not of revenue nature, but you can spend that money for any purposes, maybe for purchasing equipments, maybe for purchasing any machinery, or for as working capital, whatever it is. So that's why this is also important for you to understand. So these are some important issues that we have discussed, and you can relate all those issues to your practical problems. And some questions may be set in the examination just to test your ability or skill or your understanding about the accounting and taxation matters. So this is a blend of accounting and taxation matters. So I believe we have covered the handout, and that is all for today. Maybe we can meet again with some other problems in the days to come. If you have any question to ask, you can ask me a question. Otherwise, we can call it a day. I hope you don't have any questions, so we can just stop here. And thank you very much for attending this session. Salam.